Let's go over what happened last week as a quick recap, and then what are we looking at in the upcoming week. So this past week, we started off quite easy where we had a bank holiday on Sunday from New Zealand. And then starting off the week, we had a lot of yellow folders, as you can see, besides Bank of Canada's governor speaking. Things start to pick up a little bit on Tuesday in the US session, where you had consumer confidence coming out, which was pretty optimistic compared to the previous in the forecast. Essentially, the consumer is having a lot more confidence in the economy and the outlook of the economy in general. And then after that, we had the JOLTS job openings coming out. So that was essentially the first employment data that came out of the week that was helping us get ready for NFP that came out later into the week. So last day of the week. So we had the JOLTS job openings coming out a lot lower than the previous, and the forecast sitting at 7.44, which is a drop from the forecast of 7.98 and also the previous of 7.86. So that tells us that there were obviously jobs opening up, but a lot less than what we were forecasting and even the previous. So essentially that the labor market is still strong, but we're starting to see a decline happening there. And then we have Bank of Canada's governor speaking again. We have some CPI data coming out from Australia and Asian session, where we have inflation still increasing, but at a much slower pace than we were expecting. But overall, we still do have a little bit more inflation on the quarter to quarter and the year on the year base here. Continuing down, let's continue down onto Wednesday. We had quite an easy London session, as you can see, besides the pre-London session when you had the German prelim CPI coming out, which was also increasing at a slower pace, or a much faster pace than the previous in the forecast. So previously we were sitting at the 0%, which just means that we're sitting at the same exact level as a month prior to that, which was at negative 0.1. And now we start to see inflation increasing from 0.2 forecast up to 0.4. And in this sense, just to give you guys a quick explanation of why, CPI increasing here at a slower pace is, red compared to inflation here increasing in green, is because it also depends on where you are in the economic cycle. So for example, for Australia, where inflation is increasing, that necessarily would not be considered the most positive thing, because they're also, when it comes to the central bank policies, whether they're on the restrictive or more on the expansionary side. So that also plays an effect into this. When you're looking at the German prelim CPI, obviously, in the Germany side or in Europe in general, you want CPI to increase, you want inflation to increase at a healthy pace, because that helps with the economy's growth. So again, when you're looking at the inflation data, you might be a little bit confused. Why is it a good thing, or red for one, and green for another? It's because it depends on the economic cycle that the economy is sitting in, and whether that economy needs healthy inflation at that moment or not. So for example, in the US, CPI increasing would necessarily be in the red, because we don't want inflation increasing when the Fed is trying to cut interest rates. So going on to Wednesday, then you have ADP non-farm employment change coming out, and then you also have advanced GDP, where we saw that GDP was starting to drop down a little bit. But as you can see, for the most part, we're kind of sitting in the ballpark areas of the previous, where you did have an increase in the ADP non-farm from 159 to 233, but we already had a mixed data point coming out from earlier in the week, where you had 7.44 sitting in the ballpark area as a 7.86. So we have some mixed data points when it comes to employment in the US, so far into the week. Continuing down, we had Bank of Japan maintaining their interest rates up to that 0.25 basis points, essentially. Bank of Japan's press conference also created a little bit of impact into the markets. Then continuing into Thursday, you had the core PCE price index coming out, where you're sitting at that 0.3%. So that was an increase from that previous 0.2%. So that's the inflation essentially. So these are prices excluding food and energy. And then continuing down, you have unemployment claims, where it starts to drop down a little bit, but for the most part, we're sitting in this ballpark area as well of the previous and the forecast. And then finally, with NFP coming out, sitting at that 12K, which is a lot lower than the previous and the forecast on what we were expecting in general, but unemployment rate sitting around that 4.1%. So in the articles, I'm going to go over, why did we see that change in employment? But let's go ahead and start off with some macro fundamentals here. So this is essentially for US30, NAS 100, and also using this information for these articles here in the broader perspective when it comes to the US dollar in general, and also safe haven currencies and commodities, and really understanding what's the investor sentiment like here. So for the most part, we have been seeing that the US dollar and the equities, so US30, NAS 100, all of that is being impacted by a few different things. So for example, this upcoming week, we have the US presidential elections, and we also have the central banks, so Fed's interest rates also coming out. So with all of that taken into consideration, we know that there's a lot more volatility that's kicking into the markets. So here, for example, the historic stretch of lockstep gains in equities and bonds just skidded to a halt because of the deadlocked presidential elections, and also what is the Fed going to do. So those are the two main things for this week, whether you're looking at stocks, treasuries, currencies, commodities, anything in general. All of that is right now being impacted with the market sentiment of what are we going to see when it comes to the US presidential election. That's very important because depending on who takes office, whether it's going to be Kamala or whether it's going to be Donald Trump, their policies are really going to impact the economy and also indirectly impact whether we can continue with the restrictive policies or the expansionary policies and continue cutting those interest rates or not. And these are also going to impact companies overall as well. So when you continue down into this article, you see what does it essentially mean for the economy if Trump wins. So with Trump, for example, and we'll go over all of this here in a little bit as well. But with Trump, for example, he's going to be increasing tariffs. And so we have been seeing that those are going to impact, a lot of the electronic companies. And one of the examples that are given in these articles here is Apple, for example. But also on the very bottom of this article here is where we start to talk about, what happens with the so-called Trump trade. So investors are starting to sell treasuries in anticipation of, Trump's policies on tariffs and tax cuts, and that will essentially impact inflation as well. And if inflation starts to increase because of these policies, then obviously the Fed is the one that's going to step in, and they're going to have to take measures to really control inflation, which means are we going to see potential rate increases again or pauses when it comes to rate cuts, and not see another 50 basis point cut going into the end of the year, and essentially just saying 25 basis point cuts, and then whatever happens with the presidential election is also going to get carried on over into next year as well. So the second half of this article really talks about Trump's president Trump taking over the office essentially. So with all of that, let's continue back up where we're talking about volatility. So the VIX, for example, we saw that is starting to show a lot more volatility. We're starting to see a decreased risk appetite amongst investors and signs of potential inflation increasing. So as we're getting closer to the holidays, we're going to see a lot more of the holidays expenditures happening there as well. So overall, according to this article, the market sentiment or the investor sentiment is more on the cautious side and just waiting for what happens with the presidential elections and what happens with the Fed rate cuts. Are we on track for the rate cuts, or is the Fed going to maintain those rates at the moment and say that, hey, we're not going to get any more rate cuts going into the end of the year, and we're going to come back to this discussion early next year. So that's what the sentiment of that article is, where the investors are still on a bit of the cautious side. Now coming on to the Fed and what happened right after NFP came out and the unemployment rates came out, we have a little bit more clarity on that employment side. So as you can see from the title, it seems like the Fed is already on track to cut rates by a quarter basis points in this upcoming week, and potentially is that all we're going to see going into the end of the year. And then we also see that NFP increased only by 12,000, where we're expecting massive increases as we continue down here, where we're expecting an increase essentially, from that 233 coming up to 106, but we only got 12,000. So why did that happen? We did have 2 hurricanes, and then we also had a major strike at Boeing. Essentially, those are potential catalysts that were impacting the employment data that we have been seeing so far. But overall, the sentiment, when you continue down into this article, is that the Fed says we're still seeing a strong labor market here. Nothing has essentially changed. And right here, So we're still seeing this as a healthy labor market. So the key message is that this report is not changing directionally where we were coming into the report, and we're still on track for those rate cuts. So you guys can go through this article. It's going to give you a little bit of more detail about the Fed's insight and what they have been looking at so far. The economic activity still being flat for the most part, as we saw with the advanced GDP coming out just below 0.2% of the previous. So those are the major fundamentals there. Looking at this week, what we have coming up according to economic data. We're starting off quite easy. We have Bank of Japan's holiday on Sunday, and then continuing down onto Monday, we have a lot of yellow folders, as you can see. So we're starting off quite easy again. And then interest rates kick off with Australia's, continue down here, with Australia coming out and maintaining their 4.35%. Continue down on to Tuesday, we have interest rate, or not interest, but presidential elections coming out from the US, and expect a lot more volatility for that session in the New York session. Continue down into Wednesday. We have a lot of yellow folders here once again, and things start to pick up on Thursday with interest rates coming out from the UK and then also from the US, where we're expecting another quarter basis point cut here, and same thing for the UK as well. Continuing down onto Friday, you have a lot of orange folders for the most part, and also employment data coming out from Canada. So this week, some of the major days are going to be Tuesday and also Thursday and Friday if you're trading the Canadian dollar. Now coming on to the technical side, we're going to hop over to VIX real quick just to look at the volatility. So as you guys can see, we have volatility pushing up again at those previous high levels that we have been seeing for the last couple of months, and then volatility is starting to die down here a little bit more. I do anticipate this to pick up a little bit more going into Tuesday with the elections coming out, and then maybe slowing down a little bit more until the end of the week where we have interest rates coming out from the US. Dollar strength still remaining pretty strong, as you guys can see here. So let me just remove all of that. But coming on to the weekly time frame, you have the dollar strength that continues to push up. We're coming back into some of these key areas. And this is just to keep in the back of our mind as we're looking at any of the USD pairs that we're going to be trading. So if price can continue breaking past this, then we're essentially coming back up into this 106 mark, and that's just continued dollar strength. So as of right now, dollar's quite strong. We don't have any signs of price pulling back just yet. We had a little bit of a corrective move, came back, just held on to support in this 103, 104 mark, and pushing right back up here once again. Now looking at US30. So that's where essentially these fundamentals were coming into play. So looking at US30, we're going to hop over to the weekly time frame and then drop down from there. So we're sitting at all-time high levels. Of course, we need some corrective movements here. But last week, when we were looking at the weekly forecast, this was a level that we had marked off. And some of the key things that we're looking at was potentially, can price continue breaking below this area, or is it just going to simply bounce off of here? So the first target was that price comes down, taps into this, and then pushes back up, or we come back a little bit lower, have some sort of a deeper corrective move, and then continue pushing back up, coming back maybe essentially around here into this 40,500, maybe 41,000 mark, somewhere around here, tap into that and then push back up. As of right now, clearly we saw on the fundamental side that investors are quite cautious right now. So we have price sitting at a very key technical level here as well. So we had last week price pushing us down into this area. We tried to continue below bearish, but then last daily candle pushes right back into the zone. So right now we're sitting at a pretty key level. If price is going to continue pushing bullish, we're going to wait for price to hold on to a support here, maybe on the 4-hour, 1-hour time frames, and then continue that bullish momentum to the upside. Some potential scalps or even day trade opportunities that can be taken advantage of for US30 could be up to this 42,000, I would say almost 400 mark. Right around there. So right above the zone coming into that 400 mark, and that's going to be your quick scalp opportunity depending on where you are in the session, or even day trade. And then if price continues breaking above that, then we can see a continued push up. And again, whatever happens on Tuesday, you're going to see a lot more volatility there. Another thing that I can see happening here, and just following on to what we had marked off from last week, was if price can continue pushing a little bit lower here and essentially grab some more liquidity prior to a continuation back up. So this is simply a continuation from what we had marked off from last week. One scenario is this. A second one, a more favorable one, would be right here, and then price pushing back up, just so you have more liquidity and price has a longer, a lot more volume essentially to continue pushing back up, and has a lot more potential push up right back into this 43,300, almost 400 mark. So any of those two are quite possible going into this week, especially with the volatility closer to presidential elections and also with the interest rates. So as of right now, you're sitting at a key level. You don't have any trades until price can hold on to a support here at that 42,100 mark, and then continue pushing up into that 400 mark. So you have a pretty good range right around here. Let's continue down to GJ here. So that's essentially the same thing actually for NAS 100. Nothing has really changed much here as well from the last time we analyzed this, where price is still sitting at a pretty key level here, even on the daily time frame. As you look at it, price has been bouncing off of this level multiple times. So if we can just maintain a support here and then continue pushing back up, we could see some volatility, and we can also see some potential scalps and even day trade opportunities. So right now, price is sitting at a pretty key level right around here as well. On the intraday time frames, we're still maintaining a bullish structure here. Nothing has changed. We have not broken that bullish structure. So we just wait for price to kind of play around this area, and it's going to have the same volatility as US30 would. Coming over to GJ. So based off of the weekly time frame, same thing. We're still in a quite bullish structure here. Last week, we had a little bit of a push up here. We gapped up and then opened up at a little bit of a higher price at that 198,500. We had a little bit of a top wick, price pushed back down, and it's holding on to a support into these previous areas right around here. And that's kind of the area that we're sitting in at the moment. So with the new week starting, what we're looking for is price to just hold on to this area of support and just look for potential trading opportunities around here. So far, we know that the investors are a little bit more cautious. I am expecting the yen to have a bit more strength here compared to, some of the that we can take advantage of, while the investors are still being cautious. Now, coming onto the daily time frame, what we have is you can adjust these levels here as well. What I'm going to do, just kind of zoom out and see if this level checks off according to the price action to the left. We know that this is a major level here as well on the daily time frame. Price holding on to a resistance here. And then when you look at the current price action, what we had marked off based off the weekly time frame, that it had almost made a little bit of a bottom wick right around there. So what we're looking at is price holding on to a support right into these areas. And then what we want is this entire range here for potential scalp opportunities or even day trade opportunities. So you have an entire range of close to 200 pips that can be taken advantage of. And depending on, wherever price does break out, I think we have pretty good potential movement. So if price continues pushing back up bullish, let's say above this, I want to see price holding on to a support here. And then as price clears above this area, you have this entire buy opportunity to the upside. Pretty clean movements for the most part. And you can take partials along the way or even scale in opportunities. But with the investors being more on the cautious side, I do see the yen gaining a little bit more strength in general, just for short term. And if price continues breaking below this 194,600, then you have those potential sell opportunities to the downside. You can take advantage of scalp opportunities down to 194 level flat, and then a continued movement down here. This is the daily time frame, so know that this is going to take some time to play out. But overall, when we're looking at the structure, we're still quite bullish. We have not broken structure here whatsoever. We're just coming back and consolidating into previous levels that we have seen price react to heavily in the past. Based off the 4-hour time frame, same thing. We're still in that bullish structure. We come back down into these previous areas of consolidation, and then we consolidate here for a little bit. You get a nice bullish volume to the upside, and then you're respecting this 198,500, 198,200 area here, this range, and then hold on to this as resistance, and that's your potential scalp coming right back down when the market opens up. We know that Bank of Japan has a holiday on Sunday, so you might not get too much activity, but essentially going into London session, you might get a little bit more from the pound happening here. So those are some of your key levels. So again, your sells, longer term sells are below that 195, 194, 600. Your buy opportunities are above this 198, 500. Anything in between are your scalps and your day trade opportunities. Come over to gold. Come on to the weekly time frame, insanely bullish, as you guys can see. And we barely had any sort of liquidity grabs happening here, like, consolidation or anything like that, until price broke above this. That was all your consolidation. You get some nice break and retests happening here. We start to see some exhaustive movements here where price tapped into that 27.88 mark, 0.3, right around here, and then rejected all of those buyers, came right back down. As you can see, when the market opened up, we had a little bit of gap down happening here. So that's where the previous week closed, and then the new week, or this past week that we're trading, it had a little bit of gap down and then push right back up. So another level that I'm going to mark off is going to be pretty much the support area right around here. And if price can continue breaking its own low below that 2721.2, then we're looking for sell opportunities to come back down a little bit deeper, right around here, into this 2660 mark essentially, and we have a pretty good range. So again, this is the weekly time frame, so we know that it's going to take a little bit of time to play out. But when you're coming onto the daily time frame, we see that there's some consolidation forming here. So a few things that I do end up seeing here as investors are becoming more cautious here is price kind of just hanging around here first of all for a few days, potentially going into Tuesday or even Thursday with interest rates coming out. So something like that, or price coming back down a little bit deeper, grabbing a little bit more liquidity, correcting that massive bullish momentum that we have been seeing on the weekly time frame, and then pushing back up from there. Or we start to see after price drops below that level of 2660, and we have taken advantage of those sells between this 2721 and 2660, then we look for those further sell opportunities to come back down. So a cleaner movement again this week, very high chance that we kind of just consolidate out here. This is a very key level even on the daily time frame with consolidation, and then we push back up, depending on what happens with the presidential elections and even with the interest rates, or we come back down a little bit deeper. That is if we are going to continue that bullish momentum to the upside for gold. If not, then we're looking for this key level here to be broken, and then we have essentially broken out of this intraday bullish structure here, and then we're looking for break and retest, and then you look for deeper sells and deeper corrective moves that can be taken advantage of. We can check this out on the 4-hour time frame as well. So on the 4-hour time frame, same thing, you had a lot of consolidation here, and then price tapped into that area of 27.88, came back down with nice sells, got you a little bit of a corrective move here, and now let's see if we can come back down further into this area and consolidate out. So if you're looking for quick scalps, you have those quick scalps coming down into that 27.21, and then that's where you want to be a little bit more careful. Same thing on the 4-hour time frame, you're in that bullish structure, which isn't really broken until this 2660 mark is broken. So that's pretty much it for this week. We went over US30 very quickly over NAS 100. It's following pretty much the same thing as the US30 fundamentals, GJ, and gold. If you guys have any questions, feel free to reach out to me on Instagram at SharmaFX, or you can just comment below and I can get to your question. Other than that, I hope you guys have a safe trading week, and make sure that you guys are using proper risk management, especially on Tuesday with presidential elections and all the red folders that are coming out.